Going back to that top story on Accenture, now we all know about this big beat, 9% quarterly revenue growth coming in, which was higher than estimates. There was margin expansion as well. Not just that, the company went ahead and raised its full year guidance for FY25 from 3 to 6%. Now that guidance band is 4 to 7%. So what's the read through for Indian IT? Abhishek Kumar, who tracks the space at JM Financial Institutional Securities, is with us. Abhishek, thanks for joining in. You know, your note was very interesting because if I'm getting it right, what you're saying is that this could actually not necessarily be positive for Indian IT because some of this strong growth could be coming at the expense of the larger Indian IT service providers, maybe some market share gains in favor of Accenture. So just expand on that point and tell us why you're not really, jumping from the rooftops with this strong Accenture beat.
Yeah, hi. First of all, good morning and thanks for having me here. So you're right. What I feel is that, the large deal market has been very competitive and Accenture did flag that off, that they're seeing lower pricing through the quarter. And if we just do the analysis of market share of TCV, Accenture's market share has increased by almost 8 percentage point, year over year in the first half of this year. And we are talking about last 12-month deal, not just one quarter deal. So it seems that, and at the same time, we have seen the likes of Infosys and TCS reporting slightly weaker deal wins. So it seems that Accenture is winning more at this point. They have been very vocal in saying that they have pivoted towards larger transformation deals. So given that the client budgets are still constrained, there are no signs of discretionary pickup as yet, and a limited pool of deals in the market. A larger player winning and beating revenues on the back of those deals ramping up is not necessarily a positive read-through for the peers. So yeah, that's my take on Accenture.
Okay, all right. You're pouring some cold water this morning, Abhishek, on the enthusiasm that we had, but making very, very valid points. A couple of positives, though, is like the BFSI segment that they reported. There was a good sequential growth out there. Shouldn't that be a positive read-through for those companies that have a high exposure out there? How do you see that panning out? And also tell us, what is your top pick from the tech space?
Yeah, so first on BFSI, yes. So see, I think, there are positives clearly out of the result. I'm just not as enthused as what the stock reaction reflected. As you said, financial services clearly a positive. The growth was broad-based, and also the fact that there were no negative surprises. Right, we are coming out of a period where constantly there were client-specific ramp downs or some other negatives, which were kind of clouding the overall growth. But no negative surprises is a positive thing. But it's not just all hunky-dory already. So that's on Accenture. In terms of picks, I think I would still stick with players where there is earnings resilience or valuation comfort. So among large cap, Infosys, Wipro, Tech, Mahindra, we like. Mid cap, we like Persistent and Mphasis.
All right, no, absolutely. Abhishek, so for those sort of watching day on day kind of reactions, I think what takeaway is maybe if you get a bit of a pop, by the end of the day, things fade out, right? On the back of this, just this Accenture pop. And you put out those sort of picks, etc. As well. So the big story from a US perspective, of course, is going to be Trump and what he does, etc. Anything from that policy perspective which will matter, or you think it's just the underlying sort of fundamentals and demand environment, etc., which will be important. By the way, I was reading, there was this AWS conference, and I was reading notes of it. And there was general this view expressed that US government software spending is like something that both Musk and Mr. Ramaswamy want to cut, and they hate it. I am not sure how exposed Indian IT services companies are to that segment per se, maybe at a first level or a second order impact. Any thoughts at all, Abhishek?
Yeah, you're right. I think Trump administration is looking at making their tech spend a lot more efficient. And Indian IT services players do not explicitly disclose their exposure to US federal government. Accenture obviously has a higher exposure to federal government in US. But my sense is, whenever there is a need for efficiency in a tech landscape, IT services players generally, benefit from that. I don't know what is the current status of their tech spend, how much of it goes into software licenses and how much of it goes into services. So we need to be, a lot. It needs to be a more nuanced analysis before we can figure out if services players will necessarily benefit or, will lose out. But I think, any thought process towards making things efficient generally, as we have seen, is positive for the services players.
Abhishek, one final point. Again, now the currency, sentimentally, we all know directionally it's a good thing if the rupee depreciates for any exporter, including IT service exporters. But have you had a look at the recent positions in terms of the hedges and what kind of cross-currency impact we should be prepared for with the rupee now faltering to 85?
Yeah, so I have not looked at hedges, but just in terms of cross currency, there will be a negative impact this quarter because dollar has strengthened against all currencies, right? Not just rupee, against euro, GBP, and those would result in maybe 1 percentage point impact in terms of cross currency headwind for the quarter for the sector in this quarter.
All right, Abhishek, we'll leave it there. Thank you very much for joining us. So that is the view coming in from JM Financials, Abhishek, on IT services. We'll